I'm going to introduce our last speaker. I'm sure we're all familiar with him. He's quite popular, so I'm sure most of us know him already. Um, so we have Nifemi, right? So Nifemi is currently the CPO at Credit Direct. And Nifemi has over 10 years of experience within the fintech industry. Somebody's hand on. Okay. Yes. So Nifemi is actually the fintech bro. You've probably heard of him at some point or another. Nifemi was at System Specs. He was at Timat. The big companies, right? The senior man, right? So we're all really glad to have you here. And I am going to hand over now because I know that you're going to blow our mind with this session, and I definitely cannot wait to hear what you have for us. So everybody give Nifemi a very warm welcome. Thank you, Nifemi, for joining our session. And yes, over to you.
Hi everyone, good afternoon. How are we doing? Okay, I can see reactions. So I think I have the toughest job, as you already know, because I'm coming after Daluchi and Wizan. I think we can close the session and just say that, everything they said is what I had planned to say. So there's no need to say anything again. All in favor say aye. Hello.
We still want to hear what you have for us.
Okay. All right. Hi everyone. Good afternoon once again. Please let me know if you, or rather when you see my screen. I promise I'll try to be very fast. Oh, okay. Okay. It should be up anytime. How about now? Can we see?
Yes, it's up.
All right. Okay. Hi everyone. My name is Nifemi. Um, I've been doing this fintech thing for a bit. Most of the time it's fun. Other times I'm literally like, who sends me work? But why we're here today is, sharing from some of the experiences that have come from a place of pain and a place of joy. And I hope that at the end of this very short session, the few points of mine after this short session, would have learned one or two things. A little bit about myself. I work in a company called Credit Direct as the resident houseboy. I like to use that description because they send me a lot of things that are both in my JD and the ones that are on hence houseboy. But prior to that, I dabbled into the Nigerian fintech space a lot. Started out working in traditional banking, Zenith Bank. From there, I moved to System Specs. Later, worked with Carbon, worked with MoneyPoint, then Teamapt, worked with Fair Money, worked with Kuda before landing on this current role. So I've also done a lot across the fintech spectrum, right? So from payments, core payments like payment processing and whatnot, to digital banking, to lending, to even investments, right? I think I've checked most of the boxes. Probably maybe insurance is the only thing I've not doubled. But yeah, before now I used to wonder why people used to do all the ceremony of paparazzi about themselves. But I think as my audience, I owe you telling you a bit about myself so that when I'm learning dust, you can take a step back and try to remember if I am qualified to be learning whatever dust I end up learning. So I'll run through very quickly because I know that we are pressed for time. I'll be speaking to navigating innovation and impact. And I think I like that the Daluchi had touched on the compliance side of things. Visa had also done a good job. Sorry, one second. Visa had also done a good job of, you know, talking to us about fintech from African perspective. So why does fintech even matter, right? When I'm sharing my profile, I usually like to say that I'm somebody you find at the intersection between payments and technology. And as the name implies, I think financial technology is pretty much just innovating on financial services. So whether you're doing investments, banking, payments, what have you, the moment you start to apply some level of technology into it, by all means, you are in the business of fintech, right? And part of what fintech has come to do is to disrupt the traditional finance space. Again, I'm not a personal user of the disrupt lingo, but again, you find that in the last, say, 10 years thereabout, there's been a huge influx of fintech, as it were, across the globe, where almost every finance-related service has started to enjoy some level of automation or at least application of technology into how it is being delivered. To not bore you guys too much, right? What makes it stand out? What are some of the core pillars of successful fintechs? Successful fintechs will typically rely on advanced technologies, seamless user experience, and strong trust through data protection and regulatory compliance. And if you think about it, right, again, I have a background in product, so a lot of my contributions will be sort of biased towards the product side of things, and thankfully, I think the other speakers have spoken from different lenses as well. So for you as a successful fintech, the question is how good is your technology, how seamless is your user experience, and how much trust the customers have in whatever you're offering. And if we take a pause at that moment, a decent chunk of the audience, at least from Nigeria, when you are thinking of some of the popular fintechs that you think are successful, some of the things that come to mind is their platform is stable, their services are top-notch, and you trust that, your money or your funds are safe with them. So whether you're, as I'm talking now, you're thinking Paystar or you're thinking OPay, you're thinking Unipoint, you're thinking those things because these guys have ticked those boxes. And then what would make a fintech stand out? Scalability and adaptability. The solutions must be scalable so that when you're moving from point A to point B from the number of customers perspective, you're never found wanting. I think it was when Daluchi was speaking earlier when she said when you're building for the first 1,000, you are not just building with that first 1,000 in mind. Because what then happens if you are moving from 1,000 to a million? So for a fintech to stand out, there has to be a huge level of adaptability. And if you think about it, I think one of the examples in our markets that will come to mind is an OPay. From the very moment OPay started to grow in leaps and bounds as they have, it's probably one of the few guys that do the kind of volumes that they do, and you hardly ever hear that OPay is down here because, again, their systems have been built to adapt to whatever scale, and arguably they probably handle the highest number of P2P transactions in and out that you find in the Nigerian market today. And there's no bigger testament to that than when even a user who is not Nigerian is saying that he wishes there was an OPay in South Africa, for instance. And of course, it has to be secure and customer-centric. What does this mean? You know that your money is safe. You know that the platform through which they're offering their products or services would not be compromised. Your password, your biometric and whatnot, you are not waking up and you're finding out that somebody had logged in move 10 naira out of your money just to see if you are paying attention or whatnot. And so for me, these three things, focusing on these three things help you to identify a fintech that stands out. And if you're the one building such a business, right, have this at the back of your mind when you're building so that you're aiming to achieve these things. And I think once you've done that, by all means, you would definitely position to stand out. Uh-huh. So really, in the fintech spectrum, today, you're asking yourself, where is innovation happening? I think the major areas where you find a lot of innovation in most recent times would be in payments, in lending and wealth management, and then the more emerging side of things where you're having things like insurtech, regtech, and even the use of blockchain applications. And you find that I was deliberate about not saying crypto, but the use of blockchain applications. So in payments today, you have the key players like MoneyPoint, ClickStart, Flutterwave, OPay, who have even then started to do that, not just in our market, but in emerging markets. And you find that the level of seamlessness, the level of embedded tendencies that you start to find, almost like everybody is trying to outdo themselves. At some point, the first app was focused on cards, same for Flutterwave. Later on, they added accounts. Even that accounts have different expressions. It's now that you start to understand that there's a difference between pay with bank, pay with transfer, pay to bank, right? These are seemingly the same instruments, but with different expressions that are supposed to offer different levels of convenience. I typically joke about it where for me, I say that I look forward to the day when you are the payment instrument, right? What that means for me is I'm not swiping a card, I'm not putting in my account number. Imagine all that was needed for me to effect a payment is that I'm scanning my thumbprint or my Face ID, and from my Face ID, it shows all the accounts that are tied to me, and I can authenticate my transaction. I think that would be a beautiful utopia. For me, I think that's like the final destination of payment, maybe except if you are paying with your mind. And of course, advancements in lending and wealth management, these I witnessed firsthand over the last 3-4 years. And a good example, right? When I worked in Carbon, this was about 2019, there was no okra, there was no money. And how we used to pass bank statements was either we got customers to submit PDFs that somebody has to manually look at. We morphed from that, and then we started passing SMSs. So that's why, back then, a lot of lending companies were not on iOS. Everybody was on Android because Android is where you're allowed to read messages. You're looking out for messages from your banks. You read all the messages, check your balance, check the transactions that are happening. And then from those readings, we're able to reconstruct a bank statement from your alerts, right? Was that the most optimal way? No, some people delete alerts, some people even create fraudulent alerts and whatnot. From those messages also, we're checking whether you have messages from other lenders, maybe you were repaying a loan. So it was interesting, if you think about it, where by reading those SMSs, we could reconstruct a lot about your financial footprint. But it was a long way to go because of what we were trying to achieve. At some point, we had this head of data science, Harvard-trained guy that came in then and was like, you know what, OCR has become mainstream. Why not start passing PDFs? So instead of underwriters reviewing PDFs, this guy had to go through over 20-something bank statement samples from all the banks so that we could pass the bank statements, right? And what that meant also was the way GT Bank structures their bank statements is different from the way Zenith Bank structures their own. So we had to build different logics for all 20-something banks, right? I remember personally, I ended up opening up to 10, 12 bank accounts because we had to generate sample statements that we're going to use to build, the logic that will do the passing. Again, this was a lot of gymnastics that was built around what Mono now does in a heartbeat. Because then they're now going to fetch those bank statements, send it to you via this, all that gymnastics of reading SMSs, passing PDF that sometimes will be correct, sometimes will not be correct. With a simple API call, the same outcome is achieved. And this is just an example of how much advancement has happened. Now with open banking, a lot of these things will even be a lot more seamless because today, for the Mono and Okras of this world, there is still some friction on the authentication side of getting access to these things. So once open banking kicks off, we expect that it even opens a new layer of advancement. BNPL is another one. I remember when we started building out our BNPL product, our Credit Direct. It was iteration upon iteration. We started, we stopped, we dropped game, we started again. Because at different points, different levels of technology was coming in and we're quick to adopt some of those things. Today, we've built out a buy now, pay later experience that can be completed in less than 5 minutes, coming from, almost 24 hours and maybe one more fast. And so I spend time here because, again, it's my current reality and I've seen firsthand a lot of the advancements that are happening in that place. And on the emerging side, we have things like InsurTech, RegTech. I know that which you also talked about RegTech when she was speaking. Here you can even have companies that would handle your compliance as a service, so you don't have to hire a full-blown compliance team. A couple of those as well. I'm almost going to do free advance, but yeah, hit me up if you want to. If you're in if you're building a startup and you probably want examples of some of the places. But it's important to also note that a lot of innovation is happening there. We're starting to even see fintechs that are building out switches and whatnot based off of blockchain technology. And I can't wait to see, where all of that leads in the not so distant future. All right. So delving more on the product side of things when you're building is cultivating the out-of-the-box mindset within your product team. Because at the end of the day, you find out that a lot of the things that make products tick or business fintech companies tick will typically be that outlier feature or that simple tweak that we've put in there. And so what I would typically recommend is that, one, you're fostering an environment of creativity and experimentation. Again, it's not the easiest thing to do, especially with a large organization. Well, large organizations that are product-centric would probably not say you for that. But as business owners or even as product leaders, it's important that you empower your product teams with ownership over problems and instill a founder's mentality in them. That way they're thinking of it as their own. They're brainstorming when there's a problem, they're thinking out solutions and creating an environment that is receptive to these things. I'll give an example. There was a time a customer came in to complain. I think somebody had fraudulently accessed, or the customer had been careless with the login details and whatnot. And the customer, this was in one of my past jobs, and somebody had accessed the person's app, moved money out and everything. And from interacting with that customer, one of the things that had come out from the random interaction, somebody listened to the customer and after the customer had gone, the feedback from that was, if we simply had security questions embedded into the cash out or the liquidation process, that what happened to this woman most likely will never happen. And again, it was just us listening to the person, trying to solve the person's problem. For a couple of us, we were just in that problem-solving mode. But the other person on the team was listening to the same thing. And in that moment, it was a product idea that had come out of it. Also, it's important that you build cross-functional collaboration break down silos. So product engineering, design, customer support, compliance, making sure that everybody is part of the building process, right? It's not a one-man show. I know a lot of time products tend to, you know that thing when they say product is the mini CEO of the product, I think you get to product manager. Newsflash, you are not the CEO, there's a CEO. That's my own take. Again, yeah, it might be a popular opinion. But first and I'll tell you, are not the CEO. And so it's important that you always have that collaborative mindset because again, there are different moving parts and different perspectives will be required to create the ideal scenario. And more than anything, I'll say embrace failure and continuous learning. I think the biggest disservice you will do to yourself as a business or as a fintech is that when you fail, you don't draw a learning experience from it. And failure can be different magnitudes. It can be the smallest of things. However, for me, it's what was the learning experience that was drawn out of it? Because it gives you the opportunity to make sure that you are building a system that is resilient. If something has happened, it's all right. We'll move on from it. But why did it happen? How can we prevent it from happening? This one that it even happened, how did we solve for it? And by documenting, institutionalizing these things, we make sure that tomorrow we never have to deal with that same problem. Instead, we are dealing with a new problem that we never had. And another thing that is important is that you are innovating without alienating, right? Managing risks and habits. So you have to balance innovation with user familiarity. You don't want to be caught with, building the most, technically sound platform, but users cannot relate. You also want to manage behavioral changes in users. So one of the guys on my team had put out a post on LinkedIn, I think earlier this week. It wasn't even an actual product, but it was something that I think he had drawn a parallel from. How many of us know, how many of us had this brain jotter trend last year? Go, go, go. Anybody? Nobody.
Yes, they did. They're reacting.
Oh, okay, okay. Now, when that song was sung, is that even the correct when the song was actually sung, right? It was a really nice song to a certain audience. There is no world where the guy who sang the song would have expected that donkey years later, that song would be trending on a platform called TikTok. But there was a, I don't know if I should call it, in fact, there has been a social mindset type shift from what used to be appreciated versus what is appreciated now. And you find out somebody had picked an old sound, tied it to a different kind of emotion, and people jumped on it. That man probably made streaming revenues last year than everything he may have made since when he sang that song up until last year combined. And what was that? There was behavioral change. At some point, Davido's hit song with you, Sweet Fanta Diallo, right? He came out and said it was inspired by another old song. What am I trying to draw out? He didn't play it the way the man played the old one. Because me, I listened to that old one. There's no world where that would enjoy it. But now, once I hear, oh, it takes the grace of God for me not to climb the table. I want to be shaking my head. He has also layered a behavioral change in music choices that has now informed an overlay of an old product. Again, it might not be the best parallel to draw, but always remember that you have to manage behavioral change in your users. And of course, risk assessment and mitigation. Very, very important. I think somebody had asked the question earlier when Daluchi was speaking around innovate and let regulators come out with it. Well, there was a time in my life when I had that mindset. When it's not your company, I have that mindset. But when you have a lot to lose, you have to balance it out, sadly. Because sometimes the difference between that decision can be a hefty fine from the central bank. It can be withdrawal of your license, and you ask yourself, was the innovation really worth it or not? All right, moving on. Okay, has the slide changed? Just checking.
We are on beyond transactions now.
Oh, okay. Because I thought there was some lag. And then beyond transactions, three very important things that are starting to become mainstream: intuition, personalization, and trust. So personalizing enhances user engagement. What does this mean? For a user, if a message is coming from any of these companies or these fintech solutions, when they are generic, but times when there are subtle infusions of personalization, sort of hits you in a certain sentimental way where you're like, I'm gonna try care. Again, sometimes it's in the little things. I remember when we were building, I think it was the investment products then in Carbon, because Carbon started out as a loan company. When you're signing up, some of the things that you're asking for, we ask you for where you work, we ask you for your salary, we ask you for a bunch of information that we were sitting on. And then when we were now doing then it was called playbook product, we started to now use some of the information that you had provided when we didn't even think we were going to do investment. So imagine you had told us your salary is 500K and you are trying to invest. You now say you want to invest 250K, and just underneath you see that line that you are investing 50% of your monthly salary. I remember when we had checked with one of the users then, he found it, in fact the user had forgotten that he gave us his salary amount when he signed up initially. And it was just somewhat, I don't know if nostalgic is the word. And he just, they even know how much I earn. And, it felt nice when you put something else, it changes. So, it's 35%, it's 30%. Those little things matter. And of course, I can't say this enough. As much as we are doing MVP, we want it to be functional. Intuitive interfaces just, as in they make life easy for everybody. There's no reason why you should drop a product that people will be wondering whether it's pencil or ruler that you use to draw out the interface. Like, let it show that. I'll stop there. And of course, trust built through transparency and security. And I like to say this a lot. If there are two brands that I would say in the last 3 to 5 years, I'll build an interesting degree of trust in the Nigerian fintech space, I think it will be Money Point and OK. Like literally, okay, maybe throw in PalmPay there these days as well. But it's almost a near occult level following when customers will tell you that I've sent you money on OK and they just go and sleep. Like, even me, I find it pains me sometimes as a competitor in the space. When you say, I sent money for my OP and say you've not gotten lie. Person tell lie is your back. The OP does not fail. Or money point POSs are the holy grail of POS. And it's in the little things, because guess what? These things build trust. And when trust has been built, when you are introducing something else, you're leveraging on that pre-existing trust. Because if OK comes tomorrow and says they are launching another product for a different segment, they bought a decent chunk of royalty. And we're starting to find that UX trends are changing. you find that a lot of platforms are now having embedded um, offerings in there. Gamification has become a thing. I know at some point, my team and I we also been thinking about a lot of gamification and just continuous user engagement in recent times. Hopefully, we get to be able to do some of the things that we're thinking of. Because I remember doing some research at some point when I was working on a product class I was teaching a while back. And it would shock you to find that a decent 25% thereabouts of the apps that were on the App Store at some point were gaming apps. And what does that tell you? Human beings love to play games. Like, we are very competitive. See, when Betty told you to be guessing this thing, all of us were guessing. The moment she said the last one that we do not agree with, even Big Wiz unmuted his mic and was lie Ojoro cancel. That is how competitive we can be. We were in my current place of work. We launched a mobile app and then we started doing downloads. All staff had referral codes and we started this whole refer your friends campaign. Every time they drop the leaderboard like this, it is usually a frenzy because again, people just love competition. We are driven by competition. And so it might not be that in your space, but look out for those emerging user experience trends that shape, the specifics of what aspect of fintech that you're playing in. Slide is not good. Almost there. I think I have 1 to 3 more slides. I wouldn't dwell too much on this. For the product people in the house, maybe sign up for a product course, or maybe at some point leaders in fintech can have a product in doing products in fintech type program. I don't know, but that sounds like something that would be fun. Idea validation to MVP. Again, I will not speak too much to this thing. And also try to ensure that you have a very agile development process. I think we can't state that enough. There are usually too many moving parts in the industry. Again, I really enjoyed that session where CBN can wake up. The policy that you are using to craft your product at the moment, they just change one line or create a new one without rendering the current one defunct. So you now have to be merging 2 or 3 policies together to justify how you have decided to do it. Literally yesterday night, we were somewhere and they just shared a new circular that CBN had sent to the banks, and literally it has an implication on something that we had been working on for months, and now that thing is about to just go down the drain. Point I'm making is the agility then helps you to make sure that you haven't gone too far. If you have to stop, you haven't gone too far. If you have to change, and make sure that you're measuring and reducing waste as much as possible. Iteration, scaling, and compliance. Post-launch, continuous user feedback drives iterative improvements at scaling strategies. Fintechs must balance growth with regulatory compliance, risk management, and ecosystem collaborations to sustain long-term success. And I think we cannot stress this part enough. Compliance is not optional, right? Daluchi spoke about it, even Lisa spoke about it. You cannot not build without compliance at the back of your mind. And so I would even take it a step beyond where Daluchi had left it to say that as a business owner in fintech, as an operator, as a product person, as an engineer, you should actually familiarize yourself with who your regulators are and the different guidelines or permissible activities that cover the extent of the service that you render or that you are looking to render. Because when you have that at the back of your mind, or if you've imbibed it, it becomes second nature. And even before you've now brought in the compliance experts, you are already making compliance-driven decisions in your building. So you are not going to be building with the hope of finding out whether or not you are building right, but you are building knowing that this is how it should be done. This is how the regulators prescribe that it should be done. And, all is well for everybody. There's a civil land. So there is regulatory landscape, also navigating local and international compliance. So for instance, I know somebody was talking about whether you need license to operate a certain type of business in certain places. So if you're going into a new market, you need to clearly understand everything that is required in that market. You find markets in African countries, for instance, that will tell you that if you're coming in to set up a business, there must be a local, and the local must own at least X% equity in the business, which means somebody that you don't know from Adam, just because he's a citizen of that country, has to be a part owner of the business, right? Again, in countries like our own, they will send you similar manners. But again, making sure that you're well aware of some of these things. For instance, Visa shares an interesting thing that I didn't think we knew, where in Egypt, their card schemes is landlocked, right? And we'll be here being frustrated and angry that Nigerian fintechs are not trying or Nigerian banks are not trying because they've reduced our limit to $300 a month, whereas some people don't even have it. You know, sometimes these regulations help you to appreciate how well we're doing. And of course, data privacy and security requirements. So while there's the NDPR that covers whatever you're doing here, as you're expanding, or if you're expanding as well, make sure that you're very well aware of what and what applies in those markets, right? Whether it's in the African market, in the Americas, or even in Europe. Again, as people in fintech, you will always have to be avid readers. You always have to jump on, learning about everything within the space that you've decided to play in, so that you're never caught unawares. And I think as we continue to do that, they become a lot better at this work. And to cut the long story short, right, what are three things that you should take out of this brief, I don't know what I should call it, exhortation? As fintechs, you should embrace customer-centric problem solving. Ensure that your customers are at the heart of the problems that we are solving. There must also always be a balance between innovation and compliance. I won't stress that in because outrightly, oftentimes it can be the difference between hefty fines or outright withdrawal of licenses. And you don't want to be the reason why not just you, not just your customers, even the families of the employees would, lose out on the business that you're building. And more than anything else, build collaborative teams. Fintech is heavily cross-functional. There are a lot of moving parts. And so it's important that those moving parts are moving in the same direction. Any questions? I don't understand. I said any question, and plenty hands are just flying.
Maybe they're still thinking about their questions. Let's just give it a moment. Okay. Hi, Miracle. You can go ahead. And then Shalom. Miracle, please go first.
Hi, Nifemi. Yeah, so since you have a very good track line in fintech, or should I say in the financial sector, Right. So there's this question that's been bothering me, and just more, should I say, comparison, right? Looking at, say, country like US, right? You see that the Westerners, they have more access to credits out there, right? Lately, I was thinking of something, and I was thinking, can Nigeria ever get to the point where we will build trust, right? Where people can actually like have access to credits, just like what we have in the Western world, right? So, if you go to the US, you can easily purchase something with just your credit card. You can literally purchase anything with just your credit card, right? Most of them, they live on mortgage and all of those things. And then to Nigeria, currently, what we currently have as a trend now is buy now, pay later. I was actually trying to work on a project. I think one of the things that scared me most was CBN policy rules and all of those things. So like I got scared and I was like, I had to like drop it there. Like we ever get to that point where we can actually like expose more credit to Nigerians who can actually like say we have built a whole lot of trust. I know that currently CBN wants to do what's called open banking, which will be a plus for the fintech sectors and all of those things. Will we ever get to that point where we can actually say Nigerians can be exposed to credits out there, where they can actually do a whole lot without the fear of without the normal fear that business owners would want to think of and would want to like venture into some certain things. I'm asking you based on your experience.
Okay, interesting question. And you touched on a topic that I'm also quite passionate about. First off, we are a long way from the markets that you mentioned, whether it's US, whether it's Canada, whether it's Europe, from a credit perspective. Largely because I would say, first off, we don't have the most integrated system. And what I mean by integrated system is we've still not even agreed on the central means of identification. So today, if you are doing anything, even though yes, they are saying NIN should be it. If you are traveling, if you are talking to immigration, they want to see your passport. If you're talking to FRSC, they want to see your driver's license. If you are talking to INEC, they want to see your voter's card. And then there's NIN that they said we must all use. If you're talking to Nigerian banks, you're discussing BVN. And you find that there is not the right level of interconnectivity between that. So first thing is the non-central identity management system. Because without that, the next problem, being consequence management, cannot be addressed. Today, if I give you money and you don't give me back, sadly, nothing is going to happen. Even as a licensed entity, at best, I will take you to court. You get to court, the court will rule. First off, I gave you 100K, you've gone to court, don't know if you paid your lawyer or not, you appear in court, I will probably pay my lawyer more than that 100K, but the judge will now say the rules that you should give me my money back, and then you don't give me money back because you don't have money. And we go back to the court and the court then asks you, okay, so how much do you have? And you compare the cost that you only have 20K and you pay 20K and the court says this. We've done that between over time. I paid multiple folds of the 100K to end up only getting 20K back. The worst part of it is the time value of money. For that 100K, you're supposed to pay returns on it. If you are giving me that money back as a 20, and I'm giving that money out multiple times and earned multiple returns. So I've lost money and there's nothing I can do about it. Hence the consequence management. And because you know that you can get away with it, really and truly, when you take money, why should you pay it back? until there is a proper deterrent. So today, if you're talking to people in these markets that you mentioned, they don't joke with their credit score. I bet you if we sampled everybody on this call, max maybe 10% of this audience even know what their credit scores look like as far as the Nigerian credit bureau are concerned. In fact, some people, as I'm saying it now, will be like, so there's even credit score. Credit bureaus actually put scores on your credit profile. So there is, thirdly, a huge level of credit sensitization that then needs to happen. Because when we fix the identity part, if we also created some form of consequence, there then needs to be education. There is also still a huge amount of Nigerians that attach some level of stigma to taking credit. People don't even want people to know that they take credit because they think it's a shameful thing. It comes across as they are not capable, or you may be seen as doing above their means. Okay, that might be the case, but it's never always the case. Your debt is not up to Dangote's debt, yet it's the richest man in Africa. Paris is there. So the point is, the rich are in more debt than you can never. So you that are not really the process. And the way I like to explain the concept of credit to anybody, if you are okay with saving up to something that you want, why not get it now and pay it back? That's how I think of credit, especially when you want to purchase an asset with it, right? So yeah, that would be the answer to your question.
Actually, that answers the question, but you actually mentioned said something that got me a bit about debt collection, right? I don't know if I think CBN needs to have this technique where they use in getting funds back. I don't really know if they have actually like simplified that. I don't know if you have any knowledge of that though. Where if you're actually owing a user, because it's actually a problem where, because I actually pitched something to somebody and the person narrated something to me that, oh, she's owing a particular bank and stuff. So if I'm trying to build a product like this, do I think people will be able to pay back and all of that? Like it kind of hit me, and I had to take a step back, and I was thinking of it for a moment. Like that means if you don't have enough funding, you won't be able to build product like this. So I'm asking, like, I don't know if that process has been simplified, where somebody is actually owning a particular, say, fintech product and can't get away from it. I don't know if we have that in place or all of those things are just
So
still
to
there.
answer your question, there is something that was built called GSI, Global Standing Instruction. I think it was something from which to be, but they started testing out with banks, right, with commercial banks, and the plan was test it out with banks and extend it to MFB, fintechs, and but I don't think it has gotten the required level of traction. So what GSI is supposed to do is it's a standing instruction across all your accounts in all the banks. So it's tied to your, the instruction is tied to your BVN, right? And because of that, even if you are taking money from the GCB, the instruction means GCB can take money from any of your banks as long as there's money there for them to take, right? So would that really solve for it? Yeah, to a large extent. But beyond that, you'll be shocked at how poor we are as a nation. And what I mean by that is a humongous amount of us in this country are living below the poverty line. So the issue is not really even about collecting the money. There's a decent chunk of people that don't have the money to pay back, but they need to take that credit to survive. And if you look at the GSI thing, part of why I think it may never work is because again, they started testing out with the banks. Banks don't give out as much retail credit as the likes of Credit Direct, the likes of Fairmoney, the likes of Carbon. And so you are using GSI for a big business that has borrowed 200 million from one bank but has over 300 million in another bank. Part of what that causes is the guy is happy to hold the big bank and have a huge balance in the small bank, because the small bank will do everything in their power to protect that huge balance. Imagine one customer withdrawing money from the bank and the bank is at risk of solvency because maybe the guy has a billion naira, but this same guy is owing another bank 700 million naira. The day the bank that wants to take his 700 million naira is trying to do GSI, trust me, as the manager of the one that is holding the 1 billion that is a tier 3 or tier 4 bank, I'll do everything in my power on behalf of my customer to make sure that that money does not leave my position. Because if 1 billion naira were to leave position unplanned, some customers will not be able to withdraw money by the end of the day. And so there is some level of selfish interest that then creeps in and might stifle the success of that kind of mandate. But if it was bank agnostic, I think to a large extent, it might get better traction. And that's just my personal point of view. I can see the hand up.
Yes, we have one more person, Shalom. Shalom, you can go ahead, but please let's try to keep it brief because we're way beyond our schedule. Shalom, over to you.
Thank you, Betty. Hi, everybody. Good afternoon. I'm Nifemi. Good afternoon. All right. So, one, right? I respect the experience, like in fintech, like it's a whole lot. When you were listing the companies, I was like, oh wow, right? So, I just wanted to ask, like, what it is outside the scope of what you taught, yeah. So, I just want to know, like, what would you tell somebody that wants to, that is just going into fintech, like, you just want to niche down, right, into the fintech space. So that's my question.
So I get that question a lot, right, personally. And how I Elizabeth said, for your own good. But I think personally, I would say find some form of anchor. The anchor drives you for a bit, and then it's only after that time that I think you can or should niche down. And niching down should not even closely to other areas. It should probably be momentary. And I'll use my personal experience to close it out. Give your indulgence to give me one thing. So me landing in fintech, right? The way it started, I was working in the bank, and I don't know if things have changed now because there are now a lot of fintechs that people have as instrument. But back then, if you are not a doctor, if you are not in engineering, legal, architect, bank job was there, everybody liked it. But getting to the bank for me, I came across, fintech solutions, even though that's not what they were called, then e-payments. Came across the likes of InterSwift, Pay Direct, eTransact, Remita, and I found them to be fascinating because I would work on the bank's core banking, but when I do a transaction on any of those platforms, it will come and debit my till on the bank's steps. And I was curious as to why the third-party solution had access to come and impact on my till. That was where the passion started. That's curiosity, and that was my anchor. It was also by chance or divine orchestration that my next job would then be working in systems for experimental. And I then got to see how a lot of these things were built in the back. But at that point, all that was on my mind was payment. As I started to then dive in, I now understood that, oh, okay, there are different aspects to this fintech thing. There's the core payment. Even the payment has different layers, card systems, account-based systems. Then the emergence of digital banking came, my attention shifts. That was the initial part. How do these things work? What sort of things are you layering? At some point, an opportunity presented itself in the lending space. And it's interesting because when I joined Carbon, I joined as the PM for payments, wallets, airtime transfers, all of that was. Well, I remember vividly that we were hiring for payments, lending, and investment. And the head of product there, the Indian guy, actually wanted me to do credit. But I do not want to do credit. If I do not want to touch credit. And so I ended up doing it. But guess what? My next job was going to be as a PM for credits. And it was only at that point that I realized that there was actually a gap. There were not so many PMs that were focused on lending. Because then fintech had become a thing, a lot of product managers were coming up in the space. But at that time, I'm not sure I could count 10 product managers that were focused on credit. And that's when I started to then build a lot more into credit, understand credit. And I spent the better part of the last 4 years working on credit retail products. What am I saying? Finding an anchor. In the middle of that anchor, you can then niche. However, don't let the niche, what's the word? Don't over-focus. So yes, while I focused on building credit products, I've not lost my first love, which is payments. And so my current role, at some point, we decided to expand from this a lender into a full-blown payments company. I'm able to easily wear back my payment hats or my digital banking hats because we're now building a platform like that. I've had to even then build out an investment product from scratch, which I've never done. The point is, find an anchor, understand the basics, and from there, you can push down. Thanks for coming to my TED Talk.
All right, thank you, Nifemi. Shalom, I hope that answers your question. I think we still have one hand raised, but Ralph, I'm so sorry. I don't think we'll be able to take your question now. We are way beyond schedule, and we've kept people on the call for too long. So you can actually join the community. We have Nifemi. Nifemi is going to join us as well. And we also have several experts on there as well from different sectors in fintech. So when you join, you can ask, any question that comes to your mind, and you definitely get the answers. So Nifemi, thank you once again for this very, very insightful questions. I definitely learned a lot of things, and I'm sure everybody else picked up one or two things that's very useful to them. We also appreciate you for showing up. We know that your time is very valuable, and you could have been resting. It's a rainy day, but you're here with us. So, thank you so much. Yeah, so I have dropped the link, to everything in the chat. But first of all, let's all just take a second to appreciate Nifemi for that wonderful session. It was awesome, right? And it was very nice. So just let him know. I need more reactions, more reactions. We are so many on here, and I'm not seeing it, but we're so many on here. Salazar, I'm sorry, we are past the time for questions. Maybe you can drop a comment in the chat and we'll attend to it. Okay. Oh my God, guys, I'm getting emotional now. Wow, I had so much fun this session. And this is our very first session, so you can imagine, right? Thank you all for showing up. Everybody could have been doing anything else, but you actually decided to show up today. And I hope you found value in what's, in this session that we have provided today. And I also hope that you stick with us for the long run, right? Because we have so many things planned out, and trust me, you want to be, at the forefront of it. So don't wait and hear it from somebody else. Come and join, and then you'll be there. You have a front row seat. Don't say I didn't tell you. Anyways, so that's it, right? You can check out the links in the chat. You can reach out to me if you have any other questions, or reach out to Elizabeth. You can also reach out to our speakers, right? We have Daluchi. If you have any questions pertaining to compliance, you can reach out to her. You can also reach out to Nifemi and Wiza, of course. Yeah, so let me know in the comments if there's any other thing that you want us to talk about or address. But, I think we have come to the end of our session. No, there's no item 7. I'm so sorry. Next time, join the community first and I'll think about it.